Wednesday, August 28th, and I want to revisit the E-Mini S&P 500 on a 3-minute chart from yesterday. If you recall, I put together a video yesterday kind of trying to outline what I was looking for in terms of trades yesterday. Early on in the morning when the market opened up down, if you recall, it opened, this is where it closed on Monday, opened up on Tuesday, yesterday, which was down 16.5 points right on the open. When I put together the video, the market was trading right up in this area, right up in here. And what I had done was I put on a white horizontal line which represented the high of the day in that first half hour, and then the low of the day, right? And I was telling you that if the market started to break up through the high, then I would look for some type of movement to the upside, and I drew those fibs, and the first line was right up in here, and the second line was right up in here, right, looking to buy that initial burst to the upside once we penetrated. But the market, as you see, never did penetrate through that high. But what I also said was if the market broke down, and actually broke down through the low of the day, which it did right in here, if that happened, which it did, right, I'll label this as a NL, as new low. Once it broke down through that low, I was looking to short that market on pullbacks, right? Until proven otherwise, I'm only looking to short. And that's exactly what I did yesterday. When the market made this low right in here and the market pulled back, this was the first opportunity to sell this market short. And that was a quick trade. Market ran up, hit that entry, came right back down, and retested this low. Okay, nice trade to the downside. Then what we had set up here was a counter trend trade. Okay, a counter trend trade. The market put in an inside bar, and you've seen me talk about that inside bar all the time. The market, remember, put in a low here. Now, granted, the trend is down, and this is, I would say, a more aggressive trade. And it's a counter trend trade, trying to pick that bottom. So the market came down, took out that low by just a few ticks, right? Created that inside bar. A very, very low risk trade was to buy that market up through the high of that inside bar, placing that ISL, the initial stop loss, below the low of the day. And that was a nice trade to the upside. Now, to this point, okay, so that was a nice trade for a quick 2 to 3 point pop to the upside. What I like to use on a real strong trending day, when you get a gap of over 10 points or more, and it proves that it wants to go lower by taking out the low of the range like it did yesterday, I like to use a 39 exponential moving average. Okay. Now, of course, you see me use a 50 all the time. A lot of times I have a 100. I have a 200 on my chart. But for purpose of this video, I want to show you that 39 exponential moving average, because a 39 exponential moving average works extremely well when the market is trending strongly, especially after a big down opening. Yesterday, again, it opened up 16.5 points lower. So I like to see a move, an opening of at least 8 to 10 points. Okay, obviously yesterday hit that criteria because it opened up 16.5 lower. And then on top of that, I needed to prove itself that it wants to continue moving in the direction of the gap, right? And what I mean again by that is you watch the market closely for that first half hour, let it put in the range of that first half hour like it did here, high and low. And if it comes back down and takes out that low, which it did right in here, then you'd want to throw up that 39 exponential moving average. And every time the market hits that 39 exponential or comes real close to it, you want to be a seller. With the stop loss, I would say, probably 1.5 to 2 ATRs, average true range, above that 39. So again, this is the 39 exponential, EMA or XMA, whatever you want to call it. So this was a nice setup right in here. Okay, again, you're waiting for the market to take out the low, right, to reset that trade setup. So this is the first sell, back up to the 39. The market takes out that low right here, new low again, comes up, comes real close to that 39. I actually missed that opportunity. Didn't quite get up far enough. Came down, took out the low again, came up, kind of just missed it. Anyways, let's make this short, okay? Look, it came up to the exponential there. Came up to the exponential there. So if you take a look at this chart, again, yesterday was a perfect day. It was picture perfect. I wish every day was this perfect. But again, when the market opens up or down, doesn't matter, up or down, 8 to 10 points from the prior day, right? Gaps 8 to 10 points lower or higher. I would throw up that 89 XMA, exponential moving average. I always prefer an exponential moving average because it weighs the most recent price action more heavily than the older data. Okay, simple exponential. Again, that's my personal preference. You can use whatever you want, but an exponential is what I prefer. And again, yesterday is just a perfect example of the market coming back and kissing that 39. You know, yeah, 3 times. 1, 2, 3, where it actually touched that, okay? And on top of this third one, look at what we got here. We had an inside vertical bar. Once it took out the low of that inside pattern, after the prior bar had touched that 39 exponential, heck, even the inside touched that inside vertical bar. That was a nice trade to the downside. And each profit objective should be a retest of the low it came up off of, right? If you want to be a little bit more conservative, maybe the halfway distance, right? So again, if you're selling it up in here, halfway from where you sell it to that low, could be a profit objective. All right, hope that helps, and we'll see what happens today. This is already a 7-minute video, and I apologize, but I'm expecting, well, I would really like to see the market take out this high. Market starts penetrating up to 1633 and a quarter on a closing basis, then I will be looking to buy that market, okay? But look at what we have here. We have a bullish outside vertical bar, the third day in, or the third bar in today. Look at that, the 939 bar, right? Took out the low of the prior bar. Look, I do ramble. I apologize. I want to give you as much as I can here. Look at, took out the low here, and then took out the high and closed on the high here, right? That's very bullish. I would expect the market to continue moving up, and I would suspect the market to test probably 1633. Let's see if that happens. Take a look at that. Again, it's a trade right out of the gate, but I think I'm expecting this market to move higher from here. Now, for the rest of the day, I'm not saying that, but I'm expecting the market to move at least a couple points from this point. Okay, I hope that helps. Hope you learned a little something, and I will talk to you tomorrow. Bye for now.